It just was a coming together of, a perfect storm, if you will, but a good storm, because it allowed us to tap a market that was, very excited about that monumental movement in silver.
What's really unusual is 30 meters of very consistent, 300 to 700 gram silver mineralization through through the whole interval, consistently all the way through.
We've got a balance sheet that is the envy of everybody in the industry. I think it's one of the best balance sheets there is, soon to be over 200 million.
Good morning, good afternoon, or good evening, depending on where in the world you're signing in from. I'm lucky enough to be joined today by President and CEO of Hycroft Mining, Diane Garrett, and Alex Davidson, VP of Exploration. Folks, how are you doing today?
Good. How are you guys?
Doing great. Good to see
Awesome.
everybody. Good to see you, Romeo.
Yeah, good to see you guys. And obviously, there's been a lot of news this year, so I'm very excited to be able to do a end of year wrap up. It's obviously been a big year for Hycroft, so I think it's great that we have this opportunity to chat about everything that's happened in 2025 and then look forward to what's going on in 2026. So here's how today's going to work, just for the quite large number of folks who are popping into the room. We are going to keep this to about 40 minutes today. I've got some questions that we'll whip through pretty fast because I want to get to the questions that you guys wrote in over email and that you're going to put in the chat today. If for whatever reason I don't get to all your questions, and it's very possible that I won't during this time period, also make sure that Hycroft gets them, so don't worry about that. Questions will still get through, but I will try and get to as many as we can today. This is also being recorded. Will be available for replay. You'll find it right in your inbox in about an hour and a half. Highly recommend that you share it, show your friends, pass it around, because I think it'll be a fun event today. But let me not get ahead of myself. Dan, I'll throw it to you first as we're wrapping up 2025. I'm just going to give some quick hits and highlights, if you don't mind, because you've undergone what, you've described yourself as a transformational chapter. Started the year with a pretty significant amount of debt, over $100 million, and ended it debt-free with a whole pile of cash, around $175 million. So love if you could walk us through the strategic thinking behind the balance sheet transformation, how did the equity raise come together, and what made this the right moment to clear that debt off the balance sheet?
Okay, great. Well, thank you all for joining and appreciate the opportunity, Romeo. So we inherited an enormous amount of debt, as everyone knows, and we've been working, nonstop on finding solutions to address that debt. And given that we are a non-cash flowing company, it's a little challenging, and it was growing at its interest rate. So I think how it all came about was, first of all, we understood that the single biggest re-rating for Hycroft was going to be to address the debt. And then we knew and understood that silver, with all the fundamentals and the structural deficit around silver, was going to really explode. And people a lot smarter than me were predicting, really big movements in silver. So we felt that if we could find a way to address that debt early on, get that re-rating on being debt free as a developer, then it gives us all the upside to the moon, as we like to say, for Hycroft when the commodities did run. And so we had a lot of support from Eric Sprott. And then we've been spending an enormous amount of time marketing with these institutional investors who've been very intrigued by this really evolving, game-changing opportunity with these high-grade discoveries. And so they become more interested, and they typically don't buy in the open market. They typically come into an offering because they need size, because their funds are so large. And it was just through those conversations and getting that interest and then timing it with the day that silver went over 50, it just was a coming together of, a perfect storm, if you will, but a good storm, because it allowed us to tap a market that was, very excited about that monumental movement in silver. We went out to raise 100 million. We closed on 150, but we had orders for over 400 million. So that shows you the amount of demand from these blue chip, long-term, significant institutions from around the globe. And getting rid of that debt, we saw the re-rating, and then it just, was fueling that flame and that momentum with the continued rise in commodity prices.
Oh, awesome. And I do want to talk about actually that shift in the shareholder base, because I think that's interesting. And I know there's a lot of your longtime audience here today listening, because the base has shifted quite a bit this year. As you said, you brought in new institutional investors from Australia and the United Kingdom. Eric Sprott, as you mentioned, grew his position very significantly. So I'm curious just for your take on how has this evolution from a retail heavy registry to a more mining focused institutional base changed how you operate and communicate too?
Well, you need both. You need retail because retail provides that ongoing trading liquidity for you, and retail is a very important component of any company's registry. But having the institutional shareholder base, so that really minimizes your public float because they are long-term value investors. These are people that have invested behind our team in the past that we have been um, introducing Hycroft to, informing them of what we're doing, and waiting for that right moment when they were ready to come in. So having the institutional shareholder base reduces your float. So that just goes back to basic supply demand fundamentals. There's only so much supply of float stock available, and if people want to acquire positions, they're going to have to move the stock up in order to get them. Because 80% of the registry is not trading on any given day. Also, there's a lot of people that look to those institutions, as, smart money, if you will, and they are smart. Our retail audience is very smart too. But people look to those names, they're household names that we all know. They're BlackRocks, they're Franklin's, Eric Sprott, who's the quintessential precious metals investor and one of the most, if not the most sophisticated investor out there. When other people and other institutions and family office funds start seeing those names in your registry, they say, aha, they've done their work, they know they're onto something, and it makes them want to come in. So it's a very important transition for our registry at this particular time with these new discoveries, the way we're changing and evolving Hycroft into something never anticipated by anybody in the sector, and then also in one of the best commodity price environments we've seen in a long time, if ever.
Awesome. Yeah, I think the if ever is actually an interesting note because it could be an if ever situation. Alex, I want to get you in here because I know in addition to all the corporate changes, 2025 has delivered some really exceptional drill results too. I know most recently hole H25D6070 at Vortex returned over 30 meters, grading nearly 440 grams per ton of silver, the highest grades, longest continuous intercept you've seen at Vortex. So my question to you is, as a geologist, what's your read on what's happening geologically here, and how do these results reshape your understanding of the system?
Again, Romeo, you have great questions. This hole really was a bit of a surprise for us. We of course anticipated grade. We wouldn't have drilled it if we didn't think we were going to hit grade. But normally, what we see in Vortex is a good intercept of 200 gram silver, and you see intermittently through there, you'll see a 400 gram or a 500 gram silver assay, which isn't unusual. What's really unusual is 30 meters of very consistent, 300 to 700 gram silver mineralization through the whole interval consistently all the way through. That is not normal for Vortex. So this really changes our thoughts on how to approach this. The target is looking at structural intersections. That's what we're trying to do. And we're continuing trying to step to the west. So now we know that there's something along the fault that we were targeting. So now we've got to go north and south. I don't know if you can see my hands. Sorry, I'm a geologist. I talk with my hands a lot, and I don't ever remember the camera. But anyhow, so yeah, we got to keep that focus there. We have a lot of science to do. We have to understand all of the bits and pieces of data that we've collected to know how to get that next hole in the ground. So a lot of work to do over the next few weeks before we go back to this area again.
Awesome, appreciate that. I know the Brimstone trend continues to deliver as well, which is great, including work on that potential feeder system you announced in September. With 6 holes now completed, totaling over 3,300 meters, what's the current picture at Brimstone? How does it complement what you're seeing at Vortex?
So one of our first targets that we drilled was that geophysics anomaly. We started off drilling 2 holes. It's H25D 6074 and 6075. And the idea was to, again, get over the top in the areas that we thought the fluid minerals would be coming out of that chargeability anomaly. That was what we were trying to get to. And the other part of that goal is to test some of the structural offsets in Brimstone. And what we saw is 75 and 74 both have vein density in there that are intriguing. Don't have the assays back on those. We expect those in the next few weeks. 75 is particularly interesting to us, has quite a bit more vein density to it, some obvious silver mineralization in there. This could be a unique hole. What that tells us is we still have fluid flow coming up the system through this area. So now we know there's still potential at depth as well as above us as well. The other thing to keep in mind is these two holes were a really big step out. There's over 300 meters from the drilling that we did in 2024 to these new holes. So this is a big step for us, particularly in this type of system, aggressive. So there's a lot of room for us to do work in between these two holes as well.
Awesome. And one thing I know is you've deployed directional drilling technology from Tonatech this year, wedging multiple holes off a single parent hole at depth. Now, investors, I've only recently learned about this, so I'm sure there's investors in the room who might not be familiar with this technique. I'd love if you could just explain the advantages it offers at Hycroft, particularly given the depth and the complexity of your most high-grade targets.
Right. This is the first time that we as a team have tried directional drilling, so we're really pleased. Our first hole was really successful, and we've developed a plan going forward to utilize this more and more. The real advantage for us is the top 1,000 feet of these holes, so about 300 meters, is an area that we're less interested in. And if there's anything that we can do to save having to drill 1,000 feet and then drill another 1,000 feet to get to our target, so these 2,000-foot holes, we could save that top 1,000 feet and wedge out. And literally what they do, they put a wedge in the middle of the hole and it forces your next hole. You can turn about 3 to 5 degrees, give or take. And you can do that in any direction around that hole. So we pick an area and we very specifically target. We hit our target within 3 feet by doing this methodology. So it works very, very well. The other advantage to us is not only are you not drilling that top 1,000 feet, you're not assaying that. So it saves quite a bit of money overall when you do this kind of a program.
No, awesome. I appreciate that. I just find that kind of thing so interesting. So thanks for your insight there.
Good.
Now I know the pressure oxidization test work is now complete, demonstrating strong gold and silver recoveries from the ore. But meanwhile, you're still evaluating roasting as an alternative that could produce sulfuric acid as a byproduct. So Diane, I'll throw this to you. How do you weigh the trade-offs between these two processing routes? And just for the folks in the audience to get in your head strategically, what's ultimately going to drive that final decision?
Okay, economics is what will drive the final decision because our ore is amenable to both pressure oxidation and roasting. The benefit would be that you get paid on gold and silver on both processes, and very similar. But the roasting would add the third revenue stream based on sulfuric acid. So a lot of that decision will be, when you produce gold and silver, it's always going to be sold on the world market because it's always in a deficit situation to demand. Sulfuric acid, like, the copper and a whole bunch of other things, are driven really by supply demand. So we'll need to see where the lithium and the fertilizer industries and those other industries that require acid are about that time. We'll make that decision. We do look at long-term studies for sulfuric acid, and it's really a robust generator of revenue for our project. So it really comes down to economics. Capital costs are very similar. Operating costs are actually lower on roasting. Mining cost, of course, won't change between the two, but we're not seeing a big driver on all the other things. It really will be what that market looks like and the revenue basis, and that's how we'll decide. And that trade-off study is important on that.
Awesome, appreciate it. Now I know there's a lot of questions in the chat and on email that came in about the heap leach operations and when that could restart. So I know you've been evaluating the potential restart there ahead of milling, particularly given the oxide targets identified at manganese and elsewhere. So my question, the question that I see a bunch in the chat, with existing permits and infrastructure.
Uh-oh, I think we lost Romeo for a minute, but I know where he was going with that question, so I'm just going to jump right in and answer that question. On the heap leach, we have an RC rig that is doing drilling right now. So just to remind everybody, we have about 40 million tons of leach. Welcome back, Romeo. Thanks for joining the show. Whoops, and he's gone again. Okay, so hope everybody can still hear Alex and myself. We'll interview Romeo when he comes back, see where he's been. But so we're drilling with an RC rig because we have about 40 million tons of leach material, which really was just stripping. We'll make money off some of it, not off the other in advance of the milling operation. However, and this is very important, given the recent rise in commodity prices, a lot, if not all of that material is now economic. But what we want to do is ensure that we've got a good long life to that leach before we start up. And what we're doing is infill drilling some gaps between the known leach material, and that's predominantly at the Bay area. So we have done a lot of drilling already. These are shallow holes, they're fast holes, they're RC, and we'll have that all done in the new year. And then we'll look at that resource, and we could be able to start that up, within 6 months plus or minus. We have the leach pad ready to go. We've got, we'll need to bring in a contract miner and then some loading equipment, but all that can be done. And it's minimal cost. We can easily pay for it out of our treasury without even you all noticing how much it is. We'll come out with the cost of it, but it's really very minimal cost because we have everything at site. So we're real excited about that. And so that decision will be made in the first half of next year. And we're just hoping commodity prices will continue and we can get that operation restarted. And I know there were some questions about the timing of the PEA. So I know, Romeo, you were probably going to ask me that, but I'll just jump in there since I'm not sure if you're going to pop in and out again. I just jumped in and took over the show. So
that's perfect. No, please, you're the best.
So on the PEA timing, I think there's a number of companies who have pushed it off to the first quarter. One of the things that I don't know if everybody's been aware of, I certainly wasn't until recently, is that, we have a number of engineering firms that work on this technical report, and they take off from December 19th through the new year. And that's true of our drillers and everybody. So we see a lot of these firms taking off, and it's really, in hindsight, not a great idea to target a technical report by the end of the year because it's a large report and there's a lot that goes into it. We also do want to put a new resource out to the market and on the high grade that we drilled previously. So all of that goes into calculating the resource, and then that resource goes into the mine planning for the technical report. Many of the chapters have already been written. We are very close to buttoning it up. In Canada, you can issue a press release on your economics, and then you have 45 days to file the full report. But that is not the case in the United States. Under SEC rules, you have to announce your economics and file the report on the same day. So what we're in right now is really the final report writing stages, and then waiting on that final mine plan to get run. The cost numbers are coming in, and so we're really very close to buttoning it up. But trying to get it done by the 31st with the holidays and everything was proving to be challenging.
No, appreciate that so much. And thanks for taking over. For folks in the room, I am in Latin America's weirdest Airbnb, so I apologize for both the decor and the internet.
But I love the silver reindeer. Yeah. I love the silver reindeer.
And no, appreciate all that info, Diane. That was going to be some of the questions I was going to ask, so that's great. Okay. Alex, I did want to get you in one more time before we get to audience questions. I know less than 10% of Hycroft's 64,000 acre land package has been explored. You identified new targets, Bay and manganese from last year and this year's drilling. So as you plan the 2026 exploration program, where do you see the greatest potential beyond Brimstone and Vortex? What's most exciting to you?
I think first is manganese. Manganese offers a a lot of economic help to the deposit. It's most likely oxide. We're confident that it's going to be an oxide based on our one hole that we have in there. So part of the 2026 drill program is to get up there and do some RC drilling to help us understand geochemistry and grade a little bit better. And then we'll follow up with some more core hole drilling in there to better define structure. So I think the first big program we'll have that's most exciting after Brimstone and Vortex is manganese.
Sure. Awesome. Yeah. Appreciate that so much, Alex. And I'm sure we'll get you in again in the audience questions. But I got one last one for you, Diane, and then I'll get into the great questions that came from the audience for the last 20 minutes of today's event. Just looking back, big picture, stocks up 450% year to date. You're debt free, substantial treasury, multiple value drivers ahead in the first half of 2026. I'm excited. I know a lot of people are excited. For investors in the room who are considering Hycroft today, and I know there's a lot of them that are new to your community that are here joining us. What's the core thesis going into next year, and what are the key milestones they should be watching for?
Well, I think I would summarize it this way. Let's all remember this is one of the world's largest precious metals deposit in the very best jurisdiction, which is Nevada, USA. We are a brownfields project. We have existing infrastructure. We have permits in place. So we are well ahead of other developers. You look where the big blue chip institutional ownership is, and that's in Hycroft in big ways. Eric's brought well over 30%, BlackRock just shy of 10%, Schroders, big presence in Australia now. But it's the game changer for this project, which is this evolving, not one, but two high-grade silver discoveries. We think this extends far beyond what we currently know. We're already seeing it with the last drill results, and we're going to have a lot of news flow out on other targets that we have been studying, Alex and his team have been studying, that we think it's not confined to just Brimstone and Vortex. We've got 3 rigs on site. We've got more coming in 26. And then also we've got one of the best balance sheets in the industry. We have no debt, 175 million in cash today, which is soon becoming well over 200 million because the warrants are in the money and are being exercised. So we feel it's the right mine, it's the right team, it's the right time to invest in Hycroft, and we've got the right balance sheet to carry us through for many years to come.
Awesome, Dan. Really appreciate that summary. One question that came in a bunch on email, and there's a couple in the chat. For regulars to my conversations with the Hycroft team, this may be an old question to you, but just know that there's always somebody in the room who's learning it for the first time. So Dan, my question to you is, why not simply start mining now, and what value can be created in a mining company before you actually start selling commodities?
Well, I think we've already seen how you can create value before you ever generate any cash. I mean, I've been saying this for a long time to this audience and others, and from our last history, well over $1 billion company before we started production, then we were in construction, and then we were acquired. And in this one, I mean, how many of you thought we'd be $1 billion company today? We haven't, but we've got these high grade discoveries, and then that's been fueled by this commodity environment. And, we think that's going to continue on for some time. So there's a lot of value to be earned, because the thing about being a developer at this stage is the ounces become more valuable because they have not left the ground, right? So once you produce it, those ounces are gone, and you may be fortunate enough to replace those ounces, but they're sold at a certain price. But when it's in the ground, it becomes more and more valuable because they're still there, and you can take advantage of higher prices, hopefully in the future. But timeline to production, the heap leach could be started up, very soon next year. And then on the milling operation, we have to get the technical reports out, and then the equipment does have to be ordered, and we have to have production decisions. And then it's going to take about 1.5 years to construct it. But at least you'll start seeing the trajectory of that. That's why starting the heap leach and being able to generate cash flow leading up to the milling operation is going to be very important for us. So those are very big topics underway here at Hycroft. And aren't you just glad that we weren't in a position to start production 2 years ago and we were selling all of our gold at $2,000? What can I say? Timing is everything. Sometimes things do work out for the best.
Now, I know this is a question that I got on email, we got in the chat, and I have it too. Is there a stock split anytime in the near future for Hycroft?
There is no stock splits planned at Hycroft anytime in the near future.
Awesome. Another question I know it comes up, and certainly I know some companies where this is the case. Has Hycroft hedged any of the gold or silver that it plans to produce?
No, absolutely not. We actually are not believers in hedging. We've seen that with other companies, and not with what we're seeing in the predictions of these commodity prices and all the fundamentals that are driving this right now. We think that would be a very bad move. So, no.
Awesome. Here's a question that I think is just useful for people to understand about how securities regulations work. But somebody wants to know if the delay in the release of the drilling program assay results is due to the silver price growing.
No, but that is a very good question. So when we choose silver and gold prices to apply to the economics and even to the resource, we have to. It's whatever your qualified engineering firm is comfortable signing off on, and you don't want to be an outlier. So there's generally a price with gold and silver that the market is following that is approved by these qualified people with the engineering firms. It used to be in the US that it was a 2-year trailing look back of gold and silver prices plus a 1-year forward look. And then it became a 2-year look back. Right now, it's essentially a banking consensus. So what are all the big banks predicting as far as future and long-term commodity prices? And right now, as you'll see in the press release we put out yesterday, the general price that these engineering firms are comfortable signing off on based on banking estimates and taking into consideration, where gold has been the last 2 years and where it's forecast to gold. Those prices today are around $3,100 gold and 36 silver. But we don't hold off on it because we're expecting the prices to change, because all of the work we're doing on the resource and on the economics, that commodity price number has to be locked in well in advance, because there's a lot of work that gets done off the back of that. However, when we put the news out, we will show sensitivities at various gold and silver prices so everybody can have an idea of how much value grows with increases in those prices.
Awesome. No, appreciate that. And that's useful for folks to know how leverage works. So appreciate that answer as well.
Sure.
One question came in over email is, what level of certainty do you have that the technical report is going to be published in Q1 of next year?
Very certain, because we know how far along we are in the process.
Perfect. And the last question that came in over email, and then I'll be getting into live chat. I promise I haven't ignored you guys jumping into the last 10 minutes. Somebody wanted to know, at current prices, how much is the heap leach pad worth?
At current prices, well, the heap leach pad cost $85 million to build it. But what I'll tell you, what it means today is a lot more than that, because it would take not only the cost, which there's been some inflation since then, but it was completed in I joined 2020. It was completed in 2021. And it was started under the prior management, and then we finished it and completed it. So, there's a bit of an inflationary factor you could apply to that. But the key today is that the value that it really drives is it is ready to go. If we were going to restart the heap leach and have to build that pad, we would probably have a year of permitting and then also a year to a year and a half of construction. So that's the real value for us, is that it's there and it's ready to go.
Awesome. No, I think that's a great answer. There's one question in the chat, and we've kind of gone over this, but I think it's good to just have a sense of it for folks in the audience. What is the drilling schedule for next year? So when is next campaign start?
January 5th.
Yeah.
We're kicking off right at the beginning of the year.
Yeah. We're only
Perfect.
pausing for the holidays. The drillers all go on holiday from mid-December till January 5th. But this is going to be an ongoing drill program. Drill, baby, drill. That's our motto. Can't get enough of it.
That's fun and good. I'm glad people get break for the holidays. I'm also putting some cobwebs on my keyboard from the 25th to the 5th. So there you go. Glad the mining team gets to do too. There's a question from Justin. You noticed there are some questions about why the technical report was pushed back to the end of Q1 2026. Just any information you can provide on why that had to be pushed back. People wanted to know.
Sure. Hey, Justin. I think we probably touched on that, and it may have been when you left the room, Romeo. But just to recap, it was pushed back. It's just that, as we said a minute ago, a lot of firms take off from mid-December till January 5th. This report will be quite voluminous, several hundred pages, and there's a lot of chapters to be written and scrubbed and approved by our technical committee and board and internally. So there's just a lot of work that goes into it. And also, we wanted to get this resource out to the market with all of our drill results to date. And that resource will then go into the mine plan, which then becomes part of the technical study. So it's really just a timing. And in the mix of holidays, we've seen a number of other companies that have pushed year-end technical reports into the first quarter. And in speaking with them, they're saying the same things. It's almost impossible with everybody over the holiday period to try to get these reports wrapped up in an efficient manner.
Oh, makes sense. V-Chain from the chat asks if you ever spoke with Marshall Hayner with Metallicus and the possibility of getting Hycroft mining tokenized on crypto.
I have not. I've reached out, but I have not spoken with them. So I will.
Okay.
I will follow up.
Awesome. I do want to talk macro for a second because there's a question in the chat about Michael Oliver's analysis of $1,000 an ounce silver. And I talked to Keith Neumeyer yesterday on a webinar, and he said the same thing, and it felt very sensational. So I'm curious for your perspective on what you think the macro for silver looks like, and how much you think the sector looks to figures like Michael Oliver and Keith Neumeyer, et cetera.
Well, the thing about Michael Oliver is he has been right as rain and spot on every time he's predicted it. Sometimes he's a little early, but it always comes to fruition. I know that Eric Sprott thinks very highly of him. In fact, they both spoke at a recent conference that I was also speaking at. Michael Oliver is very technical, so it's not just the qualitative aspect, but he gets very much into the quantitative analysis, and he's very, very good at it. You can subscribe to his, this is not a pitch for Michael Oliver, but listen, he is a great one to follow. And you can subscribe to his stuff, but he's also got a lot of things out there on the internet that you can just dial into and you know, and look at some of the presentations he's made. Dial into, God, sound ancient. It's like the old dial-up internet. Okay, log into, sorry. But no, look, he was targeting 200 in a couple of quarters, and now he's moved that to 1,000. So I think it's just further underscoring the structural deficit we see in silver, the amount of demand, but most importantly, the amount of limited supply. I mean, we're not seeing new silver mines coming on yet. And even when they do, it's going to take an enormous amount to fill the gap between the supply and demand right now. We have other countries that are saying no more exports of our commodities. We're seeing people lining up outside bullion dealers and Costco trying to buy silver and gold. I mean, there's just only so much supply available. And the demand is outpacing that, so it's really setting up to explode here. So I listen. I'm a firm believer in Michael Oliver. He is just, you look at his history and he gets it right every time.
Awesome. No, appreciate that perspective. It's there's a lot of price predictions, so it's good for people to know who people can look to for a good history or track record. Isaac from the chat asks. That's pretty specific, so bear with me. Does Hycroft have a plan to offtake the sulfuric acid to Lithium Americas, and would that enable them to apply for a DOE loan to build a $2 billion autoclave?
For Lithium Americas to get the loan?
That's right.
Well, we don't get involved in what their financing routes are, but I can say that all the lithium projects, there's 5 in Nevada that are of the type of lithium projects that will require acid plants, Lithium Americas being one of them. And so we do have communications with all of them because we have talked very, loudly about the amount of sulfide sulfur we have in our ore, which is very unique to Hycroft. We have a lot of uniqueness to Hycroft, and we could be a sulfuric acid producer there because right now they're having to contemplate bringing in elemental sulfur from far away, and those transportation costs are very, very expensive with fuel cost and distances. So, it's something that we stay very closely in touch with them and, are hoping to feed in, and it allows us to be able to build our acid plant or maybe we have a relationship with them that they build our acid plant. They pay the cost for a long-term contract. Otherwise, they have to bring in sulfur and then build their own acid. So I do think anytime you're generating acid, and we're having the same conversations with officials as well, because we will be providing something very important into that industry. So we think we could get government funding off that as well.
Great, thank you.
Mhm.
One question from the chat: what is current retail ownership in Hycroft?
I believe it's about 20% right now.
Perfect. One question is kind of looking back, a reflective question, do you see any future scenario where AMC reinvests in Hycroft? And looking back, what's your takeaway from how that partnership ended up playing out for the company?
Well, they have been and still are a very big supporter of Hycroft. And, they came in at a time, Adam and I, got to know each other quite well. He was fascinated by what we were doing. It was a time when they said they were going to diversify outside the industry. Remember, we were, just coming off the whole, well, actually, probably very much in the COVID situation at that time still. And, and it was an opportunity to help us really sort of unlock the potential and do what we needed to do. And they came in along with Eric Sprott. So will they invest again? I don't know. I can't speculate on that. What I can say is that it was a good investment for them. It was a great investment for us. It allowed us to do some things that we otherwise would not have been able to do, them and Eric Sprott together. And then, of course, Eric Sprott's just continued to support us and be a huge believer in what we're doing. And so, I can't say the fact that Sean Goodman's going to be remaining on our board. He's a phenomenal board member. And they wrote some very nice things in their recent press release. So we look, people buy for one reason, because they think the stock's going to go up and they believe in what you're doing. They sell for multiple reasons that almost always have nothing specifically to do with the company, but can be just personal and business decisions they need to make. But spoke with Adam not long ago, and he's doing great, by the way. And they're still very big supporters. So you never know.
Awesome. Now I know I said we keep it to 40 minutes today, and for once I plan to actually honor my word there. So Diane, I would love to throw it to you with kind of 4 minutes left in our arranged time, just to throw some last words. I know there's a whole pile of your investors in the audience and some prospective ones too. So I just wanted to throw it to you to kind of give it the last words to wrap up 2025.
Okay, thanks. And I do want to add one other comment about AMC. They still have shares and they still have over 1 million warrants. So they are very much invested in what we do. Look, as we wrap up 2025, this has just been an incredible year. 2024 with the discoveries, 2025 with being able to totally transform our balance sheet and bring in some really good, solid long-term investors to accompany our strong retail audience. I mean, we now have an envious shareholder record. We've got drill rigs turning. We expect the drilling to increase. We've got a balance sheet that is the envy of everybody in the industry. I think it's one of the best balance sheets there is, soon to be over 200 million. Allows us the opportunity to get after this good work that Alex and his team are doing at site in a very aggressive way. The culmination of 2 years of engineering and metallurgical work to be able to come out in the first quarter of next year is huge. I think the market's going to be very pleased with where we're taking this company and the opportunities that are going to open up for us because of the great work that we're doing. And, last year, in 24, when we did all of our drilling on the high grade, we had more than a 90% success rate hit in drilling. That's phenomenal in the industry. And, we're hoping this year and planning that it's going to be every bit as good. And we're off to a great start on that.
Awesome. Well, Alex, thanks so much as always for going through my technical questions. Diane, thank you so much for helping us wrap up the year for Hycroft with your audience today. And I will say, if folks are right about $1,000 silver, I look forward to seeing how good the Wi-Fi is on my new boat, which I intend to purchase. So that'll be fun for all of us.
The next video is from your boat.
Yeah, we'll see the gentle rocking of the Mediterranean during the event. But everyone, thank you so much for joining us. And Diane, Alex, as always, thank you so much for joining me for this chat. Talk to you soon.
Romeo, always good to see you.
Yeah, thank you, Romeo. And thanks to all of you. Love my apes, love the retail. A shout out to Eric Sprott for just being a huge supporter and believer in everything we're doing. And And thank you to all of our new investors, and wish you a very, very wonderful holiday season in 2025. And let's go to the moon in 2026.